is now time for the Trader's Edge. Now, Steve Rhodes.
Good morning, Money Masters and Treasure Hunters. Welcome to the Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I absolutely treasure your presence, and my outcome today is to help you to become a better money master. And, folks, there's always one other thing I like to do, and that is to lay the groundwork so that each of us can lead an inspired life, because leading an inspired life, folks, that is what it is all really about. And what's that about? It's about the art of fulfillment and the science of achievement. And it is fantastic. Friday, I want to make sure that you have a fantastic, we're into weekend number 2 of this week, right? We had weekend number 1 that took place on Tuesday afternoon after the market closed down at 1 o'clock. Now we're going to have weekend number 2. How about that? Actually, there's a benefit to July 4th falling in the middle of the week, especially if you're a worker bee like each of us are out here. And that's what we get 2 weekends in 1 week. You got to love that, folks. So life, though, it's really about the art of fulfillment, the science of achievement. Now, the science of achievement, I call that the math part of what it is that we're looking at. And, each of us know some form of math, some more than others. I try to teach you math here just simply by taking a look at the Fibonacci summation sequence, by taking a look at contraction and expansion, by taking a look at 0.382, 0.618, 0.786, 1.272, 1.618. And the reason is because you can apply those to a chart, and you basically know ahead of time where a market would go to. Now, and it's just like if I asked you what's 10 times 10, you'd say 100. It's 100 all the times. If I said what's 30 divided by 3, you'd say that's 10. And that's all the time. That's called the science of achievement. The science of achievement, folks, is all about understanding, in my opinion, when it comes to trading and it comes to investing. The science of achievement is understanding the expectancy of your trading system. That's something that I, gave a lesson on July 4th on our special here at TFNN. If you haven't checked that out, go to the homepage at TFNN.com under Channel 5, under Tiger TV. Go ahead and you'll see 2 July 4th hours there. Both of them are worth your time, folks. And so they will, there's no question when it comes to trading, what each person wants is certainty. And the way that you get certainty, folks, is understand the expectancy of your trading system. That's all about math. But that's not really what life is all about, right? Life is an art. It's that art of fulfillment that each of us are after. Wealth building, it's just math. I can teach you the math. That's pretty easy. When it comes to life, you've got to be able to maybe listen to others, get some influence from some others, take in some things. But it's really all about questioning who it is that you want to become. And more so, who is the artist? Are you a Renoir? Are you a Monet, Picasso, a Rockwell, a Warhol? Maybe you're just simply an artist that we haven't heard about. But life, folks, it is simply about art. And so my question to you as you go into the weekend is, what does your canvas look like? What kind of pictures are you painting? Maybe some of you are just simply sculpting a statue. What's that statue look like? Take time this weekend. Take time today. Take time each day. Make sure you're making bold strokes. Make sure you're using brilliant colors. At least that's what I do, is I use brilliant colors. And make sure, folks, that what you are doing is you are sculpting, you're painting the most beautiful masterpiece that you possibly can. In other words, folks, do your math so that you can focus on your art. Let's go take a look at the math inside the marketplace right now. We got the Dow futures off about 75 points. S&P down about 10, trading out at 1351. In fact, that's what I've got on my screen here. So if you are watching us on Tiger TV, you can see that what the ES Mini did was make a 1.618. It says 1.67. That is close enough in my line of work here. So 1.618 expansion off of the last set of swing points out there. We're looking at a 10-minute chart. If you're listening to us on the radio, thank you so much for doing that. You can always catch the archive of this show on Channel 9. Now, what caused all this? Well, we had the lack of jobs report come out at 8:30 this morning. The lack of jobs meaning that what the non-farm payroll, I believe, increased by 80,000 jobs out there. Not really much of a summertime. We're in the middle of summer, as each of you know, with it today being July 6th out there. So not a lot going on in the way of job growth. Certainly not keeping up with everybody that is coming into the workforce each and every day. Now, there are about 8,000 people a day that turn age 60, I believe it is. So the baby boomers moving into retirement. There's a lot of folks out there that just simply didn't do a good job of exiting the markets when they should have, getting back in the markets when they should have. That's what the other hour that I taped for July 4th for you on Tiger TV, again on Channel 5 there. Go watch that show as well, because it is really about doing your math, and I give you some tools that make it much, much easier for you to be able to manage your long-term investments. And I know that is basically the majority of the listeners out there listening in on TFNN, and please tell 3 or 4 people about the show, folks. Just simply what we want to be able to do is absolutely be able to touch others out there. So when we take a look at math, you got King Dollar up 27 ticks today. That's up at 83.22. You've got gold down $18 out at $15.90. Silver trading off $2. No, that's light sweet crude. Okay, silver trading off 43 cents, down 1 5/10%. You've got light sweet crude pulling back to the $84 mark. That's down 240. We'll certainly take a look at that. Over across the globe, you've got the DAX. DAX certainly testing that uptrend channel that it attempted to get back into, did get back into. We'll see. In fact, you'll want to stay tuned and listen to Basil's show at 11:30. He'll probably be able to show you exactly where the DAX is closing. Right now, trading down 61 points. FTSE down 21 points. So the DAX is down almost a full percentage point. FTSE, though, not so bad, down 0.4%. Over in Asia last night, a little bit of a mixed bag. You had the Nikkei off 59 points. That was down 0.6%. You had the Shanghai up 1%, up 24 points last night. The Hang Seng down 8, so no big shakes there. Basically a flat market. Our call-in number, 877-927-6648. So let's go take a look at what's going on here, what patterns we have out here in the marketplace. Now, what you can see is that, the ES Mini really, trading right now at about 1351. 1358 is where we started at the beginning of the week. So it is the summer doldrums with regard to the markets. Not exactly what I would call a huge reaction to the lack of jobs reports out there. Certainly you had that first instinct, and that first instinct was a push down. And that push down, as I said, was a 1.618 expansion of swing points. And swing points, folks, are where you just simply see on any chart, on any time frame, where you see a major turn, a major intersection, as I like to call it. Why? Because always link the known to the unknown. When you are teaching somebody something, it is much quicker, it is much faster. Most of us drive. We know about major intersections. You got stoplights everywhere. And in this case here, stoplights on the ES Mini yesterday were at the price point at about 1010 yesterday morning on July the 5th, down at the 1357 area. So that became a major intersection. Why do I say major intersection? Well, when you take a look at the 10-minute chart, what happened once you got down there? Once you got down there, you simply started moving higher. And if we take a look at what the actual expansion was of the swing point here, the other major swing points out there, if we take a look at yesterday, it was 1.272. So it was 1.272 expansion yesterday. And where I'm going with regard to yesterday, as I'm going from the major intersection low at midnight on July the 5th, that low out there being 1362. Then it went ahead and it moved up into the 1375 area. Did that coming into 710 on July the 5th. And if you just simply took a look at that mathematical difference between that low to that high, and you multiply it times 1.272, you subtracted it from the high of 1375, it gets you down to 1358. What did the ES Mini actually do at 1010 yesterday? Got down to 1357. We can give things that, to me, that's just simply outstanding. That is about understanding your math, knowing your math out there. Now, the next set of swing points that we're taking a look at, that is a low, again, as I say, put in at 1010 yesterday, up to a high. You get the ES Mini, just kind of wandered up to the high at about 210 in the afternoon, got up to the 1368 area. If you take the 1368 and you subtract that from 1357, and you multiply that times 1.618. Subtract that from the high out there of 1368. What you're going to get down to is somewhere in the area of 1352-ish. That's a 1.618 expansion. So the first push down yesterday, did a 1.272. Today, after the lack of jobs numbers, you do a 1.618 area. Now, that area can fail, but what happened is, what I want you to be able to understand when you're taking a look at any chart, folks, is I want you to understand the math behind it. the math, the actual, that's the science of, that's what I call the science of achievement. The life of fulfillment, that's being able to pull a trigger and be able to take a trade or understand what's going on inside these marketplaces, because on these charts, what we're doing is we are creating magnificent masterpieces, folks. That's what we have going on out here. So you want to be able to take, let's go to the larger charts out here. That's the 10-minute chart. Let's go take a look at a 20-minute chart. Just simply take a look at some different time frames out there. On the 20-minute chart, what you'll also see, so we know that we came in to a 1.618 expansion of swing points. What I'm going to do out here is I'm going to get rid of one set of lines just to make it a little bit easier for you to read, and that was the A to B equals CD. If we covered that, certainly you can catch that in yesterday's archive if you'd like. Now, what the ES Mini did was made an A to B equals CD down. A 1-to-1 off of the highs coming into 730 yesterday. A 1-to-1 gave you a 1350 price projection. Again, where did the ES Mini get down to? 1349.50. You gotta love it, folks. It is a wide-ranging bar on the 120-minute chart, but it stopped and let some people off the elevator where it should have, folks. Geez, I love being here. It is Fantastic Friday. Give me a call. Love to hear from you. 877-927-6648. We'll be right back.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers, where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on TigerTV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. Computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's
Stock
Tom
market
O'Brien,
corrections
Steve
are the
Rhodes,
number one
Basil
reason
Chapman,
that a
Ken
buy and
Shreve,
hold
Kate Stalter,
investment
Dave
strategy
White, Larry
produces the
Pesavento,
poorest
or Victor
results.
Jones,
And I
you
have
can
73
catch all of
years
our
of data that
technicians
proves it.
hosting their
Now, the good
programs
thing
live
about
and
economic
archived
difficult
on Tiger
times
TV
is that
for
the
your
worst
viewing
economy
pleasure,
can
24
produce
hours
the
a day,
best
7 days
rewards
a
in
week.
the
If you
shortest
haven't
period of
checked out
time.
Tiger
In
TV
fact,
yet,
during the
then
last
visit
130 years,
TFNN.com
61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Market Day in June. One lucky winner was chosen to receive a 1-ounce silver bar courtesy of
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. 877-927-6648. Dow futures off about 80. ESPN trading out at 1350 right now. And let's go take a look at the DAX here. Taking a look at the DAX. The DAX, inside, just on the outside right now of its uptrend channel. Got in there a couple trading sessions ago. Actually came in on July 3rd, just as we were starting our July 4th holiday. Stayed in there. Today it is testing that area again until the 11:30 close out there. And so far at this stage has not broken with conviction. We'll see what happens after our markets open up here in 5 minutes. If we do take a look at what is popping out there in the pre-market, Netflix having another I guess I should just back up there. Having another good morning out here. Closed out last night at 81.72, trading out at $84 right now. Netflix. So you definitely had a sign of strength in there yesterday. We'll take a look at that chart. Let's see. Other than direction shares, what else is popping out here? Patriot Coal. Let's see. That was a $2.26 stock. It's trading at $2.56, but we can take a look at that as well. Otherwise, it's mostly just direction shares that I see and iShares. Popping to the downside, though, leading the way down, you've got Informatica Corp, INFA. They're getting chopped in half. What the heck happened? Let's see here. They closed at 43.37. They're trading at 29.95. That, folks, is called falling out of bed. It's the entire reason that it attracted me, and now I have a passion for technical trading because I can tell you on a fundamental chart, it doesn't show closing at 43, opening at $29. That is a stinger. Apple trading down this morning after getting up to 609 yesterday. Right now trading out at 607.20. Not exactly a big pop to the downside. SAP, the software company, closed out at 58.82 yesterday. They're trading out at 54.64. Acme Packet, APKT, closed out at 18.40. They're getting hit this morning down 16.50. They estimate a Q2 loss per share between 1 and 2 cents out there. Let's see here. The revenue estimates are below what they had originally projected. I don't see the numbers. There we go. Total revenue is 56. They're saying it's going to be 56 to 68 million. So that's on Acme Packet. Let's see. What else do we have popping? You've got the U.S. Oil Fund, of course, with oil pulling back. That is down this morning. Seagate Technologies, STX, they closed out at 25.08. They're trading down at 24.35. Let's go take a look at the currency market. Let's start out by taking a look at King Dollar out there. King Dollar moving into the once looks like now King Dollar wants to go tag the high out from June 4th at 83.67 here at 83.23. The U.S. dollar index having a big move yesterday, continuing with that move. It's above the 0.786 retracement from the June 1st highs to the low that was established on June 19th. Still, keeps in play the Gartley buy pattern if the dollar, in fact, decides to ever pull back here. I suspect that it will. It's just not going to do it until, it looks like me, like it may not do it until it tests the June 1st highs out there. Let's go take a look. Let's put this on a shorter term basis. Let's go see what actually is going on as we speak here. And so we can see the first big push here coming in at 850. So, after the digestion of the lack of jobs report that was released out there, and you had 5,100 contracts come in at 850. You then have, let's see, this is a 30-minute chart. Let me go put this to a 10-minute chart here, maybe make it a little bit easier. So here you got one big, somebody took a large position coming in at 840. Okay, so the response right after the jobs report, you had 3,800 contracts. Let's go see what's going on the currency. On the other side of the currency, we're taking a look at the euro. So the euro, after having a wide range bar on the way down yesterday, making a 0.786 retracement, what it's done today, it's made a little bit more than the 1-to-1 A to B equals CD. Again, the euro also in that June 1st swing point. So the euro likely wants to go test the lows of 1.22866. That being said, should keep a little bit of pressure on the U.S. markets. If we take a look at the shorter-term time frames out here, let's go take a look at the euro on a 30-minute basis here. Let me refresh my screen, and I'll go ahead and put up the swing point testing of, let's see here. Let's go see what kind of expansion. If we can do this, get this in here before the break. Not really. 877-927-6648, folks. You got the Dow futures off 100 points right now. S&P off 13. We'll be right back.
Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. You got the Dow down 123, S&P's off 13, Composite off 22, Russell 2000 lead the charge on the way down 8.7. That's off just a little bit over 1% right now. Microsoft off 11 cents, Intel down 23, Google off $3, Apple off $4. So popping to the upside, you've got Boot, Lacrosse Foot, B-O-O-T. I'm going to guess they're a shoe wear company out there. They are up a nice 81%, so it must be a buyout out here. It can't be because of people buying shoes. ABC Mart announces agreement to acquire Lacrosse Footwear. So that's why that is popping. Netflix then next in line up 3%, again 3% this morning. You've got X-Ray Techs up 11%, XRTX up about $1.38. You've got, let's see here, I'm just trying to find Amazon up about $1 right now, trading out at $2.28. Otherwise, Yum Brands is up 66 cents. To the downside, you've got Informatica down 30%, INFA, Teradata, TDC off 9%, VMware, VMW down 6%, F5 Networks off 4%, Salesforce Innovation, so software companies taking it on the chin. This morning, Citrix Systems off 4.5%, then Apple, Cummins Inc., Google, Red Hat off 5%. If we take a quick peek over into the Dow, one stock to the upside, Dead Cat Bounce stock to the upside. We're talking McDonald's up 57 cents. If you take a look at leading the charge to the downside, IBM off $2.61. That's what is certainly pushing the Dow. You've got Chevron off $1.47, J.P. Morgan Chase down 43, Disney off 20 cents right now. Quick peek in over at the IBD 50 list. You've got just a handful, maybe a half a dozen, just slightly more than that to the upside. Dollar Tree up 50 cents. Family Dollar Stores up 27 cents. Dollar General, so it's all the dollar guys that are up. And Ross Stores having a big day yesterday, as well as TJ Maxx. Both of those to the upside, and Bed Bath & Beyond. To the downside, in the IBD, you've got Priceline off $7, not a big deal there. Apple off $3, not a big deal there. Chipotle continuing its move down off $2.16, and MasterCard off $2.69. So if we start with the S&P 500, and what I've drawn in here, folks, for you is I've drawn in really two price channels that the S&P has been traveling in. So if we take a look at going back all the way to the highs from April 3rd, and when you're drawing channels, again, this is different than trend lines. So sometimes I use trend lines and show you things. Other times I'll use price channels. And when you're using channels, you're looking for co-located opens and closes. So I'm starting with the open on April 30th on the S&P 500. You're looking at the 14.1898, so 14.19 as the touch point. Your next real two touch points are going to be the May 1st high where it closed, not the high, but the close of May 1st out at 1405.82. That's going to go ahead and pick up the May 2nd open out at 1405.50. That then, as you can see along this upper trend line, you can see how both on Tuesday, that's what stopped the S&P from moving forward before we, went into the holiday, the July 4th holiday. And then yesterday, it tried getting up there, and that also stopped it. So we have, and you want to make sure that you're using 3 or more co-located opens and closes. So I think we've got the upper trend line of the downtrend channel. How is that for a little bit of a mouthful? But I think you know exactly what it is that I mean, especially if you're following us on TigerTV. Then the bottom side of this, actually, you've got several co-located opens and closes. I'm using here the close of February 7th, 2012. That close is 1347.05. That's going to run you right into the open of the following session on February 8th out at 1347. That's going to come very close to really running you into runs you right into the close on February 15th out at 1343. That's going to run you into the open on May 21st out at 1295, and also very close to the close on May 18th. So I think we've got the downside of that downtrend channel pretty well established here. Now, what the S&P has been doing, it's been traveling in this subcorrection channel up here, moving back up as it tested those highs. So if your question is, where is it that the S&P could move down to? Well, clearly when you take a look at these price channel lines, you're looking at the bottom of this blue line. Where exactly is that going to occur at? It really depends on whether it were to come down today or whether we're just simply going to, close towards the session lows today and then move on towards that area for the next couple of days, maybe Monday and Tuesday. But look for this area here to hold. If we were to move down today, you'd be in about the 1345-ish area. 1345 is going to be the B point of the A to B equals CD up. That is also present inside the S&P 500. So you're looking at the 1344.83 number. That is June 19th. You did have the S&P get above that, stayed above that yesterday. Now it's closing below that. The high there is 1363.46. So you can see the lines, as we say, have been drawn on the chart. So that is with your S&P 500. Let's go take a look at some of these stocks that are popping and dropping, specifically Netflix. So let's go see what Netflix has going on out there. Certainly they have the PR machine, as well they should, out there in full force. And on Netflix yesterday, having an absolute sign of strength. What's a sign of strength? I'm glad you asked me that, folks. That is wide price spread and accelerated volume. You absolutely had that yesterday. 14.9 million shares, price spread, really going from the close of the prior session, which was 68.49, getting up to a high yesterday of 82.90. That is one heck of a nice move. Now, what we did was we took a look at the A to B equals CD that this completed before you got any type of bullish signal, and also a test of a swing point. That was doing a 1 to 2 A to B equals CD. If you have Tom's book, The Art of the Chart, or maybe timing the trade, folks, inside there he talks about when you do a 1 to 2 A to B equals CD, that typically is an automatic change and reversal. Doesn't mean it has to happen that very next trading session. But if you take a look now, we'll go ahead and take that A to B equals CD off the screen here. What you will see is that what also was going on, what was also present inside Netflix, is it was testing its swing point lows from November 30th. That low out there of 62.37. That had 15 million shares. It was being tested the first time with 5 million shares. Not enough, and it closed back above it. It rejected it on both price and volume. It did that on June 14th with 3.7 million shares. That was the last test of that swing point low. 3.7 million going against 15 million, a 1 to 2 A to B equals CD down. I just wish this had been on my radar screen. It wasn't, but as you can see from the charts, folks, this had everything. It did everything that it was supposed to do, everything that we teach you. Then what are you supposed to do, folks? Well, you can take a trade on that for sure because your back was up against the wall, or you can wait for a sign of strength. That's what you have going on, inside Netflix right now. If we take a look at the most recent sign of weakness, and what we're talking about here is just simply inside this time frame. So we're just looking at the time frame here really coming, I would say, off of that low. So back in November, November of 2011, really all the way up into the highs of February 2012. And the last gap down that it had, gap down with 16 million shares. So gaps down with 16 million shares, up with 15 million shares, and you're coming into that gap down area. You're not there just yet. We'll see what kind of volume this picks up. It's possible that once it, if it doesn't have the volume, what it ought to do is it ought to go ahead and get up to the top of the gap. That would be $90. Get up to $90, maybe get to 90.01, close below it on less than 16 million shares. And what does that set up? That sets up the pullback to the July 3rd area, the 72.78. If you get a pullback there on some light volume, that sets up a pretty nice trading range inside Netflix. So we may have missed it once, but we won't miss it again. That's assuming that the right patterns are in place here. Now, if you take a look at the other area where this thing has support, you would go all the way back to the downdraft of October 25th, 2011. So the other area of price that you want to be looking at is 79.39. That has 45 million shares. So ideally, what happens is Netflix goes up, tests the gap from April 24th, does it on lighter volume, pulls back into the breakout, pulls back into the price point of at least, so closes the gap. So where we're looking at right there is you're looking at a price point of 72.78. 72.78, when it gets down there, then you want to see it close back above 79. You want to see it close back above 79.39 post-haste. That is that high volume gap, the most recent high volume gap down right there. That would give you everything that you need, and that would be setting up an A to B equals CD. So that is on Netflix. Let's go take a look at what is dropping. So let's switch over to the other side. You've got Informatica Corp down 28%. My guess, folks, I don't even have to guess. I can tell you that is trading down to some high volume bar that's out there, gapping down with volume this morning, volume extraordinaire. May say there's no volume in the marketplace. Must all be here at Informatica, INFA. Let's go see what in the heck they do out there. INFA. My guess is they do something with information. Informatica Corp provides enterprise data integration, data quality software and services worldwide. So they are totally gapping down with volume, 6.6 million shares. That's after making a high out there with 1 million shares. Now, its most recent breakout, well, let's just see. Let me pull this thing back because this thing has broken all kinds of swing points. Of course, it looks like it's really just setting up the A to B equals CD down there. Okay, so we found the volume bar, and I'll put this on the weekly chart. It'll be easy for you to follow on TigerTV. So we did find the volume. We knew we were going to find volume out here, and let me just refresh my screen. Because that's where something, when it falls out of bed, it's going to fall back into that area. The volume bar on this is June 25th, 2010. The high of that is 27.56. Did 17 million shares. This is on the weekly chart. It got down so far today to a low of 28.12. 28.12 versus the high of 27.56. You got to love it, folks. So it's coming right down into that area. If we take a look at the A to B equals CD pattern on this stock chart, your A point is going to be the high from July 2011 out at the 62.42 area. The B point that I'm going to use on this thing now because it's busting the B point. Well, it's not, we know that it's doing it. We've had a shortened trading week, so you just simply have to do the math out here. But it's busting the B point with volume. That B point, January 13th, low of 34.15, retraces back up. Looks like probably about a 0.618 retracement. Does that on the day of April 6th, getting up to 54.49. So the 1-to-1 is going to take you to 26.18. And what did I say the high volume bar was at? It was from 24.77 to 27.56. Now, as this stock comes into that D point with wide price spread, with a wide ranging bar, says it really wants to get to lower price. That would be $18.48 out there. If we put this on the monthly chart, that probably will somehow take us back into that price range. The price range, I said, was about 18.48. The actual high volume bar out there in the monthly chart takes you back to March of 06, that high of 17.07. That's how your A to B equals CD works. That's how understanding where price and volume come together, folks. That is on Informatica. We take a look at what else is moving in the markets. You've got Let's take a look at Teradata Corporation, TDC. They're down 8% this morning. Not on any news that I see out there, so let's go see what this stock is doing. TDC, the ticker symbol, gapping down this morning. Looks like they also have some volume. Market's only been trading here for 17 minutes, and you've got 660,000 shares to the downside. Now, this thing gapped up with 5.3 million shares, so not too bad. Gapped up with 5.3 million shares. Now, of course, what sticks out like a sore thumb is the December 21st time frame that has 8.6 million shares there. So what this thing is doing, it's coming against it's coming into the swing point here. Just taking a look at the volume. That swing point we're looking at is June 1st, has 3.5 million shares. So far today, you've done 663,000 shares. So you're certainly going to have the volume it's not there just yet, and has a high volume high that has not been was tested. So the high volume high out here, May 3rd, was actually tested on June 19th. So the low of that high, the low of that high bar, I suppose, is the way to say it. So the low of May 3rd, which is the high volume high, but the low of that is 73.62, 5.3 million shares. It actually got to 73.74, so just gets up over with 1.1 million shares. Does that on the 19th. So that says, okay, it's not going to bust it up. It would move down to the bottom of the next swing point to next swing point low. That's really what it's doing today, but it's doing it with too much volume. That's on Teradata Corp. It also does have this other gap up here that has 5 million shares on February 19th. So you really got to come back to this stock. Looks like it may be in just simply a consolidation for right now. That consolidation being $61, probably up into the 73 and change range. Dow down 126, S&P's off 13, Russell 2000 leading the charge just slightly on the way down 9 points. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back, folks. You've got the Dow down 130 right now. S&P's off 13. Let's take a look inside the ETF indices, see what we have going on out here. And I'm going to start with what has been the strength out there, which is the small caps. Now, the small caps getting inside the May 1st swing point. Low on that May 1st swing point being 81.29, high of 82.97. The volume there was 60 million shares. Came into it on Tuesday, July 3rd, came in it with 32 million shares. So you came in light, you stayed inside it. Yesterday you tested the bottom of it with 42 million shares. Now, where and when you take a look at this chart here, what you do see is you really see the strength of this move as you take a look at the IWM that we're talking about here as it came off of the C point. So it has a big gap up on June the 29th out here. Now, what the IWM, here's really where the line is drawn in the sand on the IWM that you want to pay attention to. That happens to be the April 10th downdraft. Now, you want to be looking at the high of that. That's $80.16. That has volume of 101 million. Right now, you're trading at 80.54. Look for that to be the area of support. If you close inside that, what that says is that you're going to go down and you want to go test the bottom of that for sure, which gets you back into the B point, which will get you down to the gap that occurred on June 29th. So your areas that you're looking at for support, you're looking exactly at $80.16. That's your first area. If you get down there today and you reject that on less than 101 million shares, you've got a pretty good area of support on the small caps. If you close inside there, then what it wants to do is it wants to go down and test the open gap on June the 29th out there. Let's go take a look at the Qs, see what the Qs are doing. The Qs trading out right now at 64.18. We take a look at volume on the Qs here got into that got into the May 4th swing point. That's where you really have a downdraft inside the Qs. Now that had volume of 107 million shares. You got into it on Tuesday, 15 million shares, obviously way light, and yesterday with 37 million shares. So far today in trading, you've done 12 million shares. Market's been open for just slightly less than 30 minutes. So you do have some decent volume for a Friday in the summertime. So if we take a look at what the Qs would be doing, the Qs are testing the gap up day of June 29th. That has 44 million shares. Today you're already done 12 million shares. That would set up to me that the Qs want to get down and test the low of that June 29th area. So what you're looking for, 64.16 is the high. If the Qs get down into the swing point, and it's not a swing point, but that gap up area, what you would be taking a look at is, does it reject it? Do you get a close above 64.16, or do you close inside it? You close inside it. It, too, would want to go test the low from June 29th out there, that low being 63.21. You still have on this A to B equals C to up, folks. You still have price traveling on the inside to the left of it. So you still have a strong pattern on the way up. So that is on the Qs. Let's go take a look at the SPYs and then the diamonds, if I can do that real quickly here. We'll do the diamonds first. So the diamonds traveling right now inside the April 10th downdraft. Inside there, the low of that is going to be 126.92. That has got 12 million shares, almost 13 million shares today. You've done 508,000 shares. You're not having a ton of juice come out of the diamond. So that's your price point you're looking at. And then to round things off, we'll take a look at the SPYs. The SPYs, you would be... SPYs, you're going to simply have to tune in as we do the Money Master show. So I'll cover it there. Folks, actually, it's Friday, so we're doing the Nadex Bull and Bear Hour. Thanks so much for joining me. Have a fantastic Friday, folks. If you're tuning out, if not, I'll be up with Daryl Martin doing the Bull Bear Nadex show. Thanks, folks. Bye-bye now.